What is up, investors, and welcome back to the Everything Crypto Show, where we bring you the latest and most important news moving the crypto markets every single day. Now you're back today with a crucial market update, as just 24 hours after FTX executives began to snitch on Sam Bankman-Fried, we have actually seen a member of the SEC General Counsel step down, as some pretty shady connections have been discovered between FTX and members of the SEC. Then we got to talk about Binance completing their third acquisition of a crypto exchange in the past month alone. And last but not least, we have Crypto.com continuing their global expansion, now being recognized as an official payment provider in Europe. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Saturday, everyone. Happy Christmas Eve to everybody out there celebrating. I just wanted to ask that if you've not yet hit that sub, like, and notification bell, please consider doing so and joining the Everything Crypto Squad. And I really do hope that you are spending your time today enjoying it with the loved ones. If you are able to tune in and watch this video, I really do love and appreciate you all. Now, we're going to hop right in here with the question of the day, and today's question is, do you think that Sam Bankman-Fried is in cahoots with lawmakers and regulators? Let me know in the YouTube comments down below. And we have actually previously covered on this channel some of the very shady connections between Sam Bankman-Fried, Caroline Ellison's dad, and SEC Chairman Gary Gensler. And what we actually saw today from the SEC General Counsel member stepping down, it definitely does lead to a lot more suspicion that there is in fact something very shady going on here. Not to mention the fact that Sam Bankman-Fried is facing a multitude of charges and somehow was still allowed bail. So definitely some weird things going on here, and I want to know what you think about the situation down in the YouTube comments below. It is worth noting that although FTT is actually down 6.1% on the day, if we actually take a look at the weekly here, oddly enough, FTT saw a pretty nice pump after it was announced that Sam Bankman-Fried was going to be posting bail. It went all the way from 83 cents all the way up to $1.07 here, $1.09 real quick. And honestly, I cannot understand why anybody would perceive this as good news that Sam Bankman-Fried is posting bail and why there'd be any sort of buying pressure on FTT. It is beyond me why people are still buying FTT token when, for all we know, Sam Bankman-Fried can still have some left in some secret wallets, and people may inadvertently actually be helping him raise funds by pumping the price of FTT. Now, nonetheless, it is still down 97.7% on the year, with a peak of just over $51 and now sitting at a all-time low here of 87.5 cents, currently sitting at 98 cents. So definitely been a very ugly year for FTT, but definitely warranted and not a project that I personally would be touching with a 10-foot pole. We got Mana up 8.6% on the day. Oh, speaking of projects I would not touch with a 10-foot pole, we also have Luna Classic up 5% on the day. Unfortunately, if you do want to swing trade these and make some quick money plays, you definitely can do so, but I would not be holding these for the long term. I honestly don't think that Luna Classic nor FTT will ever be making a full recovery, and I personally do not trust the founders behind either of these projects. I don't think I need to explain why too much there. Now, looking at the week here, we have everything pretty much in the red, something slightly in the green, with XDC being the only crypto with a double-digit gain in the top 100, up 14.1% on the week. This is a ISO 222 certified coin that we have been covering on the channel. Not this coin specifically, but rather just talking about the importance of these ISO certified coins. So good to see XDC up there on the week. And then on the month, we have pretty much everything in the red. Kind of a mixed bag here. We got Toncoin up 37.7%, Phantom up 14.6%, but overall, for majority of the blue chips in the market, it has been a pretty ugly month. Interesting to note that Ethereum is actually up 4.7% on the month as well. I believe Bitcoin is in the red on the month, so a little bit of decouping there, but I actually do expect Bitcoin to be the outperformer over the next couple of months, and we're going to talk about why in just a couple minutes. We have BNB down 17.1% on the month, so overall, I mean, definitely not a super hot month for crypto, and a pretty fitting way to end off what was an absolutely ugly year. But we're going to talk about why I think this can actually turn around quite significantly in 2023. Now, before we hop into the charts, I do want to mention to you guys that we have talked about Sweatcoin here on the channel before, and this is basically a way to move to earn. So if you do want to earn yourself some free crypto for your everyday activities like walking, running, hopping on that treadmill, biking, whatever it may be, definitely use the link in the description description down below. It is nice to make some passive income through crypto simply for moving, especially in a bear market when obviously there is not a lot of gains being made out there. Now we're going to look at the charts here real quick, and honestly, we're not going to spend too much time on them because you guys know my price targets here. I am waiting for Bitcoin to test that $15,000 level, and I am still a believer that we are going to test $12,000 on Bitcoin before we actually see any sort of meaningful reversal. Bitcoin right now is still playing perfectly in this bear flag pattern that we have drawn on the chart here for months. You can see that on this little fake breakout up to 18.2K, we got perfectly pegged at the top channel of the bear flag pattern I had drawn out here, and this has been pretty much textbook behavior for Bitcoin this year. This will be the 6th bear flag that has been completed, and $12,000 is where I will be looking to buy a bigger bag of Bitcoin for myself personally. Now, as for Ethereum, I do actually expect we are going to come back down to that $650 level, and for those of you that don't think it is possible, I actually discussed this yesterday. Now, in the previous bear market, Ethereum actually capitulated 95% from $1,400 down to just about $100. Now, what I am looking for here on Ethereum is actually a move down of 86% from $4,800 all the way down to that $650 level. If Ethereum was to actually retrace the move from previous bear markets, that would put Ethereum at a $420 price target. And once again, I don't think that is off the table either, but given the transition to proof of stake, I don't think Ethereum will capitulate as hard as the previous bear market, and therefore I think that $650 is definitely a pretty safe price target when it does come to ETH to start loading my boat there. Now, we have talked about why I don't think that the Bitcoin specifically, and crypto as a whole is not going to reverse over the next half a year per se, let's say 6 months to 9 months. And the biggest reason is because of Bitcoin miners. They have yet to fully capitulate. We covered yesterday how Core Scientific did actually declare bankruptcy. Actually, maybe that was 2 days ago, but regardless, I don't think that they are the last Bitcoin miner that is actually going to fold over and file for Chapter 11. And obviously, that does have to sort itself out before we can see any sort of meaningful reversal. So we have been talking about Bitcoin miner capitulation as of late. Now, I want to give you guys the opposite of that data. I want to give you some bullish data here on the retail side of things that I think definitely does demonstrate why we are going to enter a bottoming zone in the next 6 to 9 months and then enter that accumulation phase. And I do believe we are set for the next bull run to occur in mid to late 2024. So here is Bitcoin's this is the 1 year plus HODL chart. So effectively, what this green line here is the actual price of Bitcoin on a logarithmic scale. And then the red line here is the amount of people that have been holding their Bitcoin for over 1 year. So what you're going to notice here is that if we actually go back to 2018 in the bear market, we had about a 53% 1 year HODL wave here, meaning that 53% of Bitcoin had not moved in over a year's time. Now at current prices, we are looking at a price of 16.8K on Bitcoin with a 66.5% 1 year plus HODL wave, meaning that effectively over 65% of all Bitcoin has remained dormant for the past year. This is hitting new all-time highs, and I do expect that we will easily be over 70 to 75% as the bear market does continue, and as people do begin to actually learn more about Bitcoin and the long-term prospects of this asset class, why this is not a risk-on asset that you trade. You simply buy and hold and trust that Bitcoin will continue to gain value over time. Now, on the exchange side of things, these two lines definitely do kind of correlate here because you can see that as we have seen a massive increase in the 1 year HODL wave for Bitcoin, we've also seen some major outflows on these exchanges, signaling that people are taking their Bitcoin off of exchanges and moving them into cold storage and leaving their Bitcoin dormant in these cold wallets. You can see that at the beginning of 2020, we actually had over 3 million Bitcoin on exchanges. That is now down to just 2.15 million. So people definitely learning about the importance of self-custody. We are now down to about 10% of all Bitcoin actually on these exchanges and less than 10% of all Bitcoin circulating on these exchanges. Sorry, just over 10% of all Bitcoin circulating on these exchanges. But regardless, this does go to show you that despite the fact there is 19.2 mil in circulation, there is not that much to go around on the centralized exchanges, and I do think this number will continue to decrease with time. Now we are going to take a look at Ethereum as well, which has also seen some very impressive outflows on this side of things as well, down from 32 million here in late 2019, and it is now sitting at a balance of 18 million on exchanges. So oddly enough, more Ethereum has actually left these centralized entities than Bitcoin has, but both of these charts are moving in the right direction for these two crypto blue chips. Now, here is another chart I want to show you guys, and this is the Bitcoin realized price chart. So this is the realized market cap divided by the total amount of generated coins, and this is corrected 1 million for the quote-unquote Satoshi coins that he has in his wallet, supposedly. And what you're going to notice here is that we have the actual price coming in at 21K. Sorry, that's the realized price, and the actual price coming in at 16.8K. And what's interesting about this on-chain statistic, guys, is you're going to notice that every single time Bitcoin has crossed below, or rather the actual price has crossed below the realized price, it does usually indicate that we are making somewhat of a bottom formation. You can see that we actually crossed below it back here in 2011, then we crossed back below it here in 2015, once again in 2018, again in 2020, and now as of, I want to say it was June of this year, we are once again back below the realized price. So the reason this is important though, and something I do want you guys to make note of, is that after the actual price it does cross below the realized price, this does not mean that we are due for a reversal right away. Okay, you can see here the first time we crossed below in 2011, we actually did not make a clean break back above until 2012. Then we crossed below once again here in 2014 and did not make our way back above it until 2015. In 2018, we saw Bitcoin's actual price cross below the realized price for a 6-month period before making our way back to the upside. 2020, we are treating as an anomaly because obviously that was sort of a flash crash that nobody saw coming. And then once again here in June of 2022, when we did see those local bottoms at the time anyways, this is when Bitcoin, once again, we had the actual price cross below the realized price. And I do believe that we are going to actually get back above this realized price in about a year's time, which does lead me to believe that we probably are going to see Bitcoin back around 20K before the end of 2023. That is my personal prediction, but once again, that does not mean that we cannot go lower before we go higher, and that is what I do think is going to happen probably in the early half of the upcoming year. So another thing that I do want to point your guys' attention to here is the Bitcoin yearly candles, and what you're going to notice here is that we actually had, first of all, we had 5 green candles in a row from 2009 all the way up to 2013, and then boom, we had a red year in 2014, and then from 2015 to 2017, 3 more green candles, 1 red candle, 3 more green candles, and this year we have put in a fat red candle. So this does lead me to believe that this next upcoming year is going to be green for Bitcoin. It might not be a crazy green year. You can see here that after finishing in the red in 2014, that we only saw a moderately green year in 2015. So I do believe that we will see another moderately green year in 2023, and then in 2024 we will begin to see these big green candles come back. Now, as for the Ethereum side of things, I mean, ETH is just chugging along, doing its own thing. Once again, you can see that we have only minted 2,675 Ethereum since the merge did go live 99 days ago. Had we been under proof of work, this would have instead been 1.177 million Ethereum brought back into the float that miners would be dumping on us, using us as exit liquidity. I do believe this is why Ethereum has showed some outsized strength in the bear market, and that is why I do also think it will continue to be a top performer in the upcoming bull run. Now, as for the amount of people actually staking their Ethereum, this is now up to 15.7 mil, and if you take into account the float of 120 mil, that is about 13% of all Ethereum locked up on the network, validating it, and people are claiming Ethereum as those rewards for helping verify these transactions. And what is more interesting here, if we actually take a look at the amount of people staking, is the amount of active validators here coming in at 491,000, just under, and you can see that this is also approaching new all-time highs. So the fundamentals for Ethereum are still looking really like incredibly strong, which is surprising given what has happened in the broader crypto markets, especially with the centralized exchanges. And that is what we're going to talk about now, starting off with the SEC and FTX. So We talked about this yesterday as the SEC charged Caroline Ellison and Gary Wang for their roles in a multi-year scheme to defraud equity investors in the crypto trading platform FTX. Ellison and Wang are cooperating with the ongoing investigation. So as a part of their deception, we allege, and this is coming from the SEC, this is actually in their official document here, but we did review this yesterday, so I'm not going to go through the entire thing again. But the general baseline here is that they schemed to manipulate the price of FTT and exchange crypto security token that was integral to FTX to prop up the value of their house of cards at both FTX and Alameda Research. We further allege that Ms. Ellison and Mr. Wang played an active role in a scheme to misuse FTX customer assets to prop up Alameda and to post collateral for margin trading. When FTT and the rest of the house of cards collapsed, Mr. Bankman-Fried, Ms. Ellison, and Mr. Wang left investors holding the bag. Now, what is more important here? Two things. The first thing is that the SEC is flat out calling FTT an issued exchange crypto security token. So defining FTT as a security token. And the second thing here is the actual fact that Caroline Ellison and Gary Wang are now obviously cooperating and essentially snitching on Sam Bankman-Fried. And we can obviously assume that this is to reduce the charges that they are going to face in the future, hopefully. And we did cover this yesterday, how the SEC calls FTT a security token. We talked about how this does mean some potential risks for BNB and Crocoin. And a lot of people don't like to hear this. A lot of people do think it's FUD, but the matter of fact is, if FTT is being deemed an exchange security token, I don't see why BNB and Crocoin would be any different, okay? The matter of fact here is that the reason they are defining FTT as a security token is because if the demand for trading on FTX platform increases, demand for the FTT token could increase such that any price increase in FTT would benefit holders of FTT equally and in direct proportion to their holdings. And basically what they're saying here is that these exchange tokens do act as proxy stocks in the sense that the more demand that is driven towards the exchange, the more demand and more price action that should go into these coins. The same way that if there is more demand for an iPhone, then Apple's revenue will go up, and if their earnings reports are good, that might cause the stock price to increase most likely. I mean, that's definitely not been the case this year for anything in the stock market or the crypto market. But their point being here is that owning these exchange tokens is kind of like betting on the success of the exchange itself. And I am not saying that I agree or disagree. You guys know I've been saying it for a while that the SEC is the number one enemy to crypto, one of them anyways. And I do not want these cryptos to be deemed securities for the main reason that I do not want the SEC overseeing crypto regulation in the United States. But that is the reasoning that they are in fact going with. And here's a clear reason of why I don't think the SEC should be in charge of crypto. As the general counsel member does announce her departure from public service just one day after Sam Bankman-Fried posts bail. Now, the reason this is pretty interesting here is because an outgoing top SEC lawyer dined with SBF during the FTX lobbying spree. So it is actually Dan Berkovitz that is stepping down, and he reportedly dined with former FTX CEO Sam Bankman-Fried at an elite Indian restaurant in October last year. Bankman-Fried's FTX US acquired CFTC-regulated crypto derivatives firm LedgerX 3 weeks later and then rebranded the unit to the FTX US Derivatives. Other executives, including FTX General Counsel Ryan Miller and former FTX President Brett Harrison, joined them. You can basically see here that it obviously is not confirmed what their dinner discussion involved. Still, it occurred during the heat of last year's bull run at a time when FTX was pushing to offer margin trading and leverage to US-based crypto investors. So kind of curious why he would actually go ahead and be meeting with people at the SEC at the time that FTX was trying to make a massive push to offer margin trading through their US-based platform nonetheless. So definitely some shady things going on there. Once again, don't think I need to explain why the SEC should not be overseeing crypto. And the timing of this person stepping down here is definitely pretty suspicious. So we're going to hop into the Binance news now here, as we did discuss just a couple days back how they are set to acquire Voyager's assets in a deal worth just over $1 billion. Now, the last time FTX was set to acquire Voyager, they were actually doing it at a $1.42 billion valuation. Obviously, since then, Voyager has lost a lot more value on their assets as the market has been tanking, and now Binance come in here and scoop them up cheaper for $1.022 billion, and it will seek bankruptcy court approval for the deal with Binance US at a hearing on January 5th of 2023. Ironically, I actually believe this is the same day that Sam Bankman-Fried is set to be back in court. Don't quote me on that, but if that is the case, then January 5th will be a very interesting day for the crypto markets indeed. And Binance US has kind of really discussed like their commitment here to making customers whole again through this acquisition. So that is something that I definitely hope they are able to do in the coming weeks and months. The only thing I would say is that given that Binance is effectively a major global monopoly at this point, the court may have an issue with this actual pending acquisition. But still, given the fact that it is reliant on people getting their money back, or rather these people are almost reliant on Binance acquiring Voyager to get their money back in a timely manner, it may go through just due to the pressure of, obviously getting people back the money that has been locked on this platform. It'll be pretty much half a year by the time this court hearing does actually go down on January 5th. Now, we actually spoke how following this acquisition of Voyager, actually, this was a couple weeks prior, but this was Binance actually acquiring the Secure Exchange Bitcoin, and this is an exchange that is regulated by the JFSA, the Japan Financial Services Agency. So effectively, what Binance has done here is acquired an exchange that is completely compliant with Japan regulators, and by regulating this exchange, Binance also acquires this regulatory approval. So a very smart way of actually gaining regulatory approval by acquiring priorly approved platforms, essentially, instead of seeking this regulation and approval through their very own Binance platform. And obviously, they can either rebrand or just keep this exchange the same, but effectively, this is a very interesting strategy and a pretty savvy way of obviously growing their customer base, entering a new market, and getting that regulatory compliance. Now, we have actually seen a very similar move here as Binance finalizes the acquisition of an Indonesian crypto trading firm called Toko Crypto. So, as a part of this deal, Toko Crypto CEO will step down, 58% of staff will be laid off, and Binance actually was already a shareholder, and they did have equity in the company, but basically they have now injected more cash and increased their shareholding in the company. They say here that Binance has finalized this acquisition, and I guess that now they are effectively majority stakeholder in the company, which does give them majority of the voting rights. So we have now seen Binance once again making a very similar move here in Indonesia. And interestingly enough, CZ did actually tweet about how the volume has been down a lot in Indonesia based on the tax laws that did come into effect earlier this year. So not too sure why he is targeting this region, but he did go ahead and actually complete this. So now becoming a majority stakeholder in Toko Crypto, once again following the same acquisition strategy that we had just seen them done previously there with that other exchange in Japan. Now we're going to wrap this up here talking about Crypto.com, as they have also been seeking a lot of regulatory approval throughout this bear market. And something else about their strategy is that they have not just been seeking approval on the exchange side of things, but also on the payment side of things, okay? So we actually covered a couple days back how they secured their payment institution license in Brazil. And this is obviously big here, as a recent study by Chainalysis ranked Brazil in 7th position globally in this year's crypto adoption index. We know that Brazil is keen on really adopting crypto, so obviously Crypto.com is looking to get that regulatory approval here, but not only as an exchange operator, also as a payment institution license, a payment provider. And they're not just looking to be a crypto exchange, they're looking to actually build out the infrastructure and to be more of a payment company here for cryptocurrency. You can actually see here, if I go to Crypto.com, I want to show you guys this, because this is definitely, I think, very intentional on their behalf. And I've pretty often compared Crypto.com refer to it not only as a centralized exchange, but also as basically a crypto bank, okay? Because they do offer a whole suite of products here for users. And one of the big ones here that I do actually want to talk about is Crypto.com Pay. So this is effectively where you can purchase gift cards in app. You can earn some nice cash back in CRO. And all these transactions are facilitated at a $0 in gas fees via the Crypto.org chain, which obviously, if you are using the DeFi wallet and staking via Crypto.org, you are in fact helping support this underlying infrastructure. So they are also focused on payment providing, and this is definitely a very good move for them now that they did make, as it was announced that they are now a Visa principal member in Europe and can issue the Crypto.com Visa card on its own. They no longer need to go through a third-party entity. They no longer need to give somebody else a portion of the fees made from these cards, and this should hopefully help them in the future be able to bring more incentives to these cards, as they are, first of all, saving money on actually not having to deal with any third-party payment provider, and second of all, they are now able to issue these cards cards on their own without needing to actually get approval from anybody else. So definitely very interesting moves here from both Crypto.com and Binance. And while Binance is the biggest crypto exchange in the world right now, I do believe that Crypto.com is set to be a very serious contender in the next bull run. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Saturday, and I hope to catch you in the next one. Peace out for now.